Hey everyone, we had some big news come out of Amazon that I'm going to talk about in this video here. Frankly, Amazon's success in 2023 has surprised me, and in fact, I think it's even surprised Amazon management, as we'll find out in this video. So without further ado, let's jump into this big news from Amazon. So I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. So the company reporting 143 billion in revenue in its most recent quarter, which was up 11% year over year, and reporting 11.2 billion dollars in operating income, which was up 343% year over year. This was a huge boost in operating income from the same quarter to prior year. In fact, management is expecting these types of operating profitability to continue even in the next quarter, although maybe not as big of an improvement year over year, still a big improvement in most circumstances. Management continues to be encouraged by the progress they're making in lowering their cost to serve, improving their customer experiences, and investing in future growth. The first part is the part that I was surprised with, and I think the part that management has been surprised with is lowering their cost to serve. Their costs and expenses got out of control following the pandemic. Remember, they experienced a surge, an absolute surge in consumer demand when we entered lockdown. People were spending more time at home. They were hesitant to visit stores, and Amazon attracted millions of new customers. Sales exploded, and so they experienced that surge. And to meet that customer demand, they overinvested in the business. They overinvested in capacity, in employees, in logistics, in everything, because management at the time was saying, look, we don't know exactly how much to increase because this is unprecedented, the increase in demand. But if we're going to make a mistake, we'd rather make the mistake of over-investing, and that way the customer experience is not sacrificed. If it costs us a little bit more money in the short term, we'll make that back by serving our customers well during the pandemic, and we feel that that would increase our goodwill with our customers, and in the long run we'll make that up. And so there was a big jump in expenses, but now Amazon is growing into that investment, and profits are surging, as you see there, by 343%. Operating income jumped. Now, one of the reasons for that is the move earlier in 2023 to go from a single national fulfillment network to 8 distinct regions, represented by one of the most significant changes in their fulfillment network in their history. And management saying that it made more impact than even they optimistically expected. Typically, when businesses engage in this kind of change, they'll do some net present value models, they'll do some scenario analysis, and in that scenario analysis, they'll have at least 3 scenarios where they'll say, this is the worst case, excuse me, this is the worst case scenario, this is our base case, and this is what we would expect in the best case of this change. And what management is saying is that these results were better than even their best case scenario that they modeled out. So that's truly encouraging for Amazon stock investors. So the resulting shorter travel distances and fewer touches mean lower costs to serve. But more importantly, shorter distances and fewer touches mean that customers are getting their shipments faster. So in addition to lowering costs, it's also increasing speed of delivery, which is improving the customer experience. And even more impressively, management does not think they've fully realized all of the benefits yet, meaning there's more cost improvements to come. I can see why management is forecasting continued significant increases in operating income even in the next quarter, despite the fact that operating income has already jumped so much. And so management saying we've got a long way to go before being out of ideas to improve cost and speed. And I believe that. At the end of last year or the beginning of this year, I made a video about just how much money Amazon spent in fiscal year 2022, and it was over $500 billion in spending, right, on costs, on operating the business, on serving their customers. And so there's in that area, if you're spending that much money, there's so much room to improve. Even a fractional improvement will make a big improvement to the bottom line, because even a 0.25% improvement in your expense base will make a big improvement on the bottom line. And so, yeah, I believe management when they say we've got a lot of room to go before we run out of ideas to improve our cost realization. AWS revenue grew 12% year over year in the third quarter, and now that business is at an annualized revenue run rate of 92 billion. Now, AWS has been plagued with customer slowdown in that their customers are trying to rationalize their spending, trying to see where they can cut costs, and this is one area they've been cutting costs. Revenue growth for AWS had been falling consecutively for several quarters, and in the most recent quarter, the 12% growth was flat from the previous quarter. So in Q2, AWS grew by 12%. In Q3, AWS grew by 12%. Prior to that, AWS was growing by much faster rates, so it was slowing down, and now that's stabilized. So that was good news for Amazon stock investors as well. And they're seeing the pace and volume of closed deals pick up. It wouldn't surprise me if in the fourth quarter, AWS demonstrates revenue growth at higher than 12%, which would be an acceleration from previous 2 quarters. And that would really, really be a catalyst to boost Amazon stock price if indeed there is a growth rate in the AWS segment above 12%, in conjunction with operating profit margins that are at or above 30% or near operating profit margin of 30%. That's something I'm paying close attention to for the next quarter with Amazon. And of course, generative AI is on the top of mind of every investor, and Amazon is on the leading edge of artificial intelligence in a few different ways. Number one, they've been working on developing their own custom chip called Trainium and Inferentia chips, and they've been boosting production, boosting supply to capitalize in this growing market. Another thing they've been doing is offering large language models as a service. So businesses that want to employ large language models, they can purchase that as a service from AWS. That's been boosting revenue for the AWS segment. And then on the other side, they've been using AI to help people better discover products they want more easily and to access information to make better decisions. They also use generative AI to forecast inventory in various locations and to derive optimal last mile transportation routes for their drivers to employ. I mentioned already that in 2022, for the whole year, Amazon spent over $500 billion. Now you can see in that if you can use AI to help lower costs to serve customers, to find better routes to go to customers when you have items to deliver, each of those minor improvements could end up in billions of dollars of improvement on the bottom line. So AI is certainly one area Amazon is employing to improve their profitability. They're already demonstrating that with their increases in profitability, and I wouldn't be surprised if they continue making progress on this front. And for that reason, if you're looking for one company that's going to benefit from artificial intelligence, Amazon is definitely up there in terms of companies that will benefit from the rising effectiveness of AI. So there you have it, some big news coming out of Amazon. But before I let you go, please subscribe to the channel. It'll really help me make more videos just like this one. Thank you so much for watching.